Okay, welcome back everyone. So we are busy with question number 4. Okay, so let's see what is required of us and then we'll go through the information. So the first thing they wanted you to do is prepare the account for grand manufacturers. So you only have to look at information that relates to grand manufacturers. And they want you to do their in the creditors ledger of Grosdane. So they want you to do your creditors account for that specific person. Okay, then they also tell you they do not make use of the coding system. So that is that where it's a 01, 02, 03 that's assigned to a specific transaction, which means you do not have to worry about it. And then they tell you are required to supply the name of the appropriate source documents. So you need to give the source document that is required as well as the folio details. Now, why they tell you that is because marks would normally be allocated to those. And then they tell you document numbers are not required. So they're not going to provide you with any documents numbers. So that is 15 marks. Then question 4.2, then they tell you answer the following questions using the information provided in the transactions. So those are sub questions that does not have anything to do with the information above, so we'll deal with them as we get there. So let's then go through the information that was provided. So what they tell you is Grosdane trades in building materials and have amongst others the following debtor and creditor. Now, Timber Builders is a debtors and Grand Manufacturers is a creditors account. So here they already tell you it's a creditors account that you need to prepare. So that means when you increase the statement, you would include the amount in the credit column, whereas if you decrease it, you would include it in the debit column. They also tell you that they are a VAT vendor and all amounts are inclusive of VAT. Now remember, with creditors, same with debtors, those amounts are inclusive of VAT because we're showing the amount that is outstanding at the end of the day. Okay, so that information is purely there to try and confuse you. Sometimes it might be applicable if they give you amount exclusive of VAT to work out what is the inclusive amount. So if we go through this information, we are only going to look for information that relates to grant manufacturers. We do not care what happened to Tembo Builders. They did not ask us to do their account. So do not waste time on information that's not relevant. So the first thing we do is we look at what is the opening balances. So the balances on the 1st of May for Grand Manufacturer is 58,000. Which we will then show as the opening balance in their statement. Then on the 6th, they tell you we paid grant manufacturers by check, so we paid them the amount owing on the 1st of May, so we paid this 58,000 and we received a settlement discount of 5%. So we normally get a settlement discount if we pay it prior to a certain date. Then they talk about Tembo Builders, so we ignore that information. Then on the 7th, we've purchased goods on credit. Okay, so we acquired goods from grant manufacturers for 240,000 less 5% trade discount. Now remember, with trade discount, we always reflect the amounts in our accounts after the trade discount has been accounted for. So when we capture this in the creditor statement, it will be excluding the trade discount amount. Then they talk about Tembo Builders again. We ignore that. Then we sold goods to Tembo Builders. We ignore that transaction as well. Then we returned merchandise to grant manufacturers. So we returned goods and it was 40,000. So we'll account for that. Then we purchased some more merchandise on credit from them for 360,000, and on the 23rd we received a debit note for an undercharge of 5,000. So they accidentally, the invoice they issued to us initially wasn't the correct amount, so the correct amount subsequently. And then the last transaction talks about timber builders. So taking this information, I'm going to share the Excel screen online. So I'll just read the information as we capture it. Okay, so what you had to do first is the first information they provided to you was the opening balance. So what you do in your statement is you capture the balance and the balance brought down. Now what I want you guys to note is you see the debit and the credit column here. I'm going to just make it yellow. When we do the opening balance, I do not want to see any amounts in those two columns. There shouldn't be anything there because we're carrying a balance forward, and then we only start showing the individual transactions and how they increase or decrease that balance. Okay, so that's something that a lot of students do wrong, as they include the balances here. Now, because it's a creditor, this would be a credit balance in the beginning. So I'm just going to hide that. So it would have been a credit balance to start off with. But you don't necessarily show it as a credit or debit balance when you do a debtors or creditors statement. You just need to know if it's a creditor, I will capture anything that increases it on the credit side, anything that decreases it on the debit side. Okay, because the other amount, the 175,000, so the question was, why don't we include both balances? So the 175,000 relates to Tembu Builders, which is a debtor, and they haven't specifically asked us to prepare their statement. So that's why we also ignored any information relating to that debtor. Okay. Now we said on the 6th, we paid them by check and we received a 5% discount. So the first thing you do is on the 6th, when we pay them by check, our document is a check counterfoil. Okay, so that is the document we have. The folio number would be cash book payments. So that is the journal where we would have captured that information. Now, because it's a creditor, we would debit the account if we pay it. Now, because we received a 5% discount, our payment would have been calculated. Just going to make it slightly smaller. Would have been the 58,000 multiplied with 95%. To get to the 55,100. Okay. And then, oh, and let me just see what's happening here. Okay, so that's the first step. Now we said that some of it is only paid, we received the discount. Now to work out the discount amount, we take that 58,000. We deduct the 55,100 to get to a balance of 2,900. That's remaining. So that is what our discount would be. Now to check if you've worked it out correctly, you could also take the 58,000 and multiply it with the 5% that was provided. Now when we receive any discount, which is not a physical payment, we will capture that in our general journals by way of a journal voucher. Okay, so your document for any discounts or any write-offs is a journal voucher which relates to the general journal. Now, once I've captured the discount, my balance here should be 0. Okay? Because we have paid that account in full. Okay, so that's how you are sure that you've captured the discount for that transaction. Okay, because they tell you they've paid the full amount. Okay, so that's the first thing you have to see. Then we said we purchased goods on the 7th on credit for 240,000 less 5% trade discount. Okay, so when I purchase goods on credit, my document is an invoice, and it's a credit invoice normally. Okay, wise. Okay, so it's a credit invoice. If you wrote an invoice, we probably would have given you the mark as well. Then the journal you would have captured it in was your creditor's journal, so CJ. And the amount is the 240 multiplied with 95%. So that is after the trade discount has been taken into account. That is how you work out the invoice amount. So that is all they would charge you. The amount after the trade discount is what you would capture, the 228. And then you add that to the 0, which was a balance in the previous transaction, to get to the new balance. Then the next transaction was on the 17th. We've now returned some of this merchandise back to the creditor. So that means we would reduce our creditor's balance, and when we reduce the credit balance, we generally get a debit note from, okay, so here they've got a credit note. Okay, so they said you received a credit note, so that's why they wrote credit note. Then you've got a CAJ, is the journal you would have captured it in, and the amount would have been 40,000. Now, because it's reducing the balance, you take the 228, which was the previous balance, you would deduct the 40,000 to get to your new balance of 188,000. Then on the 21st, we purchased some more goods on credit, so it would look exactly the same as the transaction on the 7th of May. The value would have just changed to 360,000, and you add that to the closing balance of 188 to get a new balance of 548. And then we received a debit note for the undercharge, so that's where they're correcting an error. Now, because of the fact that they undercharged us, they are increasing our account with another 5,000. So you credit the account with the 5,000. It would have gone to your creditor's journal, that invoice, but in this case, it's a debit note. So it's just the addition to the invoice. And then your closing balance would be 553,000 Rand. Okay. So with this one, it's straightforward transactions. The two things which most students generally get wrong here is we capture it on the incorrect side. So instead of reflecting it as a creditor, people go capture it as a debtor. And then the other thing is not showing the amounts after the discounts have been taken into account. Okay, so those are the main things students do wrong when they do this type of question. Now, if we move on to question 4.2, they've given you 3 transactions and then they ask you to comment on it. So the first one, they tell you Timber Builders owed gross drain 175,000 at the beginning of May. On the 6th of May, they made a payment of 70,000 by check, and it was returned as a result of having insufficient funds. Then they sold further goods to Timber Builders on the 16th for amounts of 176,000, allowing them a 5% trade discount. Now the question is, in your opinion, do you believe the transaction dated 16 May was a wise business transaction or not, and give reasons for your decision? So they want to know the sale that they've made on the 16th of May. Should they have given them a trade discount? Yes or no? And why do you think they should have or should not have? What do you think is the reason? Okay, so in this question, what you had to see initially is that the previous payments they made, the check bounced. They didn't have sufficient funds. So normally when we provide someone with a discount, we would give them a discount if they, to encourage them to buy more and they have a sound, what's it, sound business or business. So they are able to actually pay your accounts. So normally we give someone trade discount that is a good customer, that pays their accounts on time, they have sufficient funds to buy it. We're trying to get them to buy more. Now, because of the fact that their check bounced the previous time for insufficient funds, their ability to make payments is not that great. Let me just, I see doesn't. Okay, let me just quickly merge here so you can see there. Okay, so because of the fact that they did not, they check bounce, we don't know if the next payment, if they will actually be able to make that payment. So that is questionable at most. Trade discount to try and encourage them to buy more. But we benefit those guys that actually, at the end of the day, would buy more. I want to actually encourage them to buy more. I don't want to encourage someone to buy more that's not able to repay me in the future because I'm going to write that off. So that is normally where a trade discount comes into play. Did someone online have a question? Okay. So that is what you should have seen, or that's sort of what you should have answered for that question. Now in question 4.2.2, they tell you if on 31st of May, Grosdane was informed that timber builders were insolvent, how much money would Grosdane have written off as irrecoverable? So now they tell you at the end of the month, they are insolvent. So how much money do we need to write off? Now here they're actually asking you about the data. So to work out how much we need to write off, we have to look at what was their opening balance, was there any purchases, and were there any payments or any returns? So the first thing you show here is you bring the balance brought forward, which is on the PDF, would have been at the beginning, the 175,000. Now, because they paid the 70,000 and it was an RD check, we do not take that into consideration. So the transaction on the 6th and the 8th shows you the check was paid, but it was reversed, so we ignore that. Then we said on the 16th, we've sold goods to them for 176,000, less 5% trade discount. So then I show the sales transaction here, which is the 176,000 times the 95% gives me the value of what they've purchased. And then the last thing is on the 27th, we've charged them another 45 Rand because of the fact that they still owe us money. So we've levied interest onto their account. So if you sum all of that together, if at the end of the month they had to write off an amount, the total amount that needs to be written off would have been that 342,245 Rand. And that's how you would have calculated it. Okay, then the next question they ask you, okay, if we're going to write off this full amount, what account am I going to debit? What account am I going to credit to reflect this into our accounting records? Okay, Now, we know Tembe is a debtor in our books, so what we need to do is we need to reduce the debtors control balance to a 0. Now, debtors control is normally a debit account, so I'm going to credit that. Then I'm going to debit credit losses, or you can have bad debts. But what is the last thing that we need to account for based on the information that they've given us? What is the other account that we need to account for? Okay, so let's quickly ask you this. Is the person registered for VAT, yes or no? Okay, so the class says yes, it's registered for VAT. So as soon as we have a person registered for VAT, we also need to, we are allowed to claim the input VAT if we write off a debtor as bad debts because of the fact that we initially had to raise the output VAT that we paid over to SARS. But SARS says if that debtor becomes irrecoverable, so we will not get that money back, we can claim the input VAT that we paid over back from SARS. Now, something I just want you guys to know, to make a note of, you credit the debtors control account. You do not credit the individual debtor name. Okay, you would not have received the mark here if you write the debtor's name. It is the debtors control account that is being credited. Okay, and that was question 4. Do you guys have any questions on that?